report on jobs was so much lower was not because of high interest rates. Those interest rates are not what you pay. Those are the overnight lending rates to the banks by the FRB, the Federal Reserve Board Bank, lends money to banks to make sure that they're always liquid at open. So if they're short of cash, they borrow some money from the Federal Reserve Bank, and then they have to pay it back with interest. That interest rate that you see that the FRB talks about, Powell talks about, is for the banks. The banks can still charge you a whole lot of really expensive credit on your credit cards or your car loan or your mortgage and so on. It doesn't necessarily mean that those are going to go down, and it definitely isn't going to help the job market. Now, this is a tough thing to swallow because I'm telling you a lot of stuff you've never heard about before, probably, and it's hard to believe because you want to believe the retail news. Retail news is very dangerous. Amazon, with its robots, has lowered its cost of payroll. So it has revenues that are starting to rise. We can see that over time, since the start of this year, end of year, that we have this accumulation going on that is steady and a little bit dip here and then right back up. So it didn't even go that far down here. This accumulation pattern shows us that the dark pools are agreeing. They often talk to each other, but not very often. They're often private companies like Vanguard and Fidelity are private companies. So you can't really see what's going on in theirs, but you can with BlackRock or State Street. So what we have is a fundamental level. And this is pretty much staying within that fundamental level because it is waiting for the third quarter earnings release and the projections or forecast or guidance, as it is called, from the CEOs. It's called guidance because it is not a prediction. By the time we start and get halfway through the third quarter, there's already almost 2 months worth of data already there. So the CEOs are able to tell you with a high degree of probability what the forecast is for quarter four, because they already know, because we're partway into quarter four when we start the earnings season. Okay. So they can guide or give forecasts that are fairly accurate, and they need to do that. The last thing they want to do is lie because they can go to jail for that. And they have to make the most important investors they have, the dark pool buy-side institutions who hold vast